Morning, everybody, and welcome to the Mortgage Coach Tuesday interview. So every Tuesday, 9 o'clock, we interview someone amazing. Sometimes it's an author, sometimes it's an industry coach like today, and sometimes it's a top producer in the marketplace. Got my wingman. We are coming live out of Vegas. We just finished Amplify yesterday. It was amazing. Like Renee executed and was the architect of one of the best big group events I've ever been to. He's always the master of the small group, how to create transformational change, 2 days, 12 people going deep, but he has mastered the large format. It was amazing. What do you think, Todd?
I agree. It was a great opportunity. Number one, it's always good to connect face to face, right? So, we got Khai coming on in a minute. He was here yesterday, and you had this opportunity to just, rub elbows with our friends, right? To me, that's great. But you're right. I mean, Renee did an awesome job of really building out that frame message tie down and giving examples over and over of how we all need to show up better to tell our story, to better connect and influence those that we're talking to.
So before we bring Khai on, I'm going to share my one takeaway. If Deborah comes in, she'll get to share hers. If you could share one. All right. And guys, I had a lot. Like anybody who follows me on Instagram, I think I posted more photos and quotes and things of wisdom than I've ever done in an event, because I just, that's a takeaway. I want to make sure my kids get this one. So I share it with everybody, and that's a killer one. I want to tell everyone about that. But my biggest takeaway is that the first step is turning on the camera. Like, we live in this digital age shift, and in person was amazing. It was the best being in person with people. But you know what? Connecting on video with Zoom right now is amazing. I've had multiple conversations with leaders in the industry where it was text video, and it was amazing. It's text, it's email, it's social media, and it's in person. Like, it's all of these things in one. Guys, that's leadership. And the one message I have from that takeaway is that, guys, it is a difficult time in the market for most loan officers right now. Weekly sales meetings are the single most important thing that leaders need to do right now. 30-minute weekly sales meeting, and figure it out. Have some people in person, have some people on Zoom, follow up in this omni-channel way. It's leadership time, it's market share time, but you got to turn on the camera.
I know. I think you're spot on. And what I would say is it's always about that frame message tie down. What I tend to find is oftentimes as loan officers, we talk and we talk more, and then we don't actually tell the client why this matters to them, right? So you're going to give them the backstory, right? The frame, then you're going to tell them what it is you want to tell them, but then you actually have to explain to them why it matters to you. And I feel like oftentimes we give the frame and we give the message, but we don't really hit it on the why. Like, why does this really matter to you, and do that tie down? And I think that is what I would encourage all of you. Go back and watch some of the interviews that we've had with Renee in the past, and listen to how he tells you that you need to do that. Because ultimately, in the end, if I don't say, hey, this is how it matters to you, then all you're doing is hearing me talk. And we got D-Bird right over here now taking a picture.
Before we bring D-Bird in to there, so we've only got Khai McBride for 30 minutes, guys. So what I want to do, and I'll bring you in for part of this, but I want to say for like second half of this, we'll do a bigger debrief on this. For now, I want to introduce our guest today, one of the industry's best coaches, one of the few coaches that is also a mortgage coach grandmaster. So back in the day when Khai was an operator, he was a mortgage coach red belt before we had red belts. He was a coach to the coaches around mortgage coach. And for today, we got a tough market. There is chaos. We need clarity. So Khai, show me the money.
I'm having FOMO right now because I was literally with you guys yesterday, and I wish I was there to do like this sort of Backstreet Boy group, 4 people with a microphone singing group. I want to be a part of that right now, but I had to fly back home to LA. My takeaway was actually what Renee started the conference with. He said, this is no longer the age of information. We are in the age of attention. There's too much information out there. And the key is, how are you going to get people's attention? And that's really what this market, this generation of buyers is about, especially the generation today. You've got a lot of millennials that are dominating the marketplace, pretty much millennials and Generation X now, right? So the boomers are kind of peeking into the sunset. They're like retirement homes, things like that. But in terms of the millennials, they're a much different generation because they do a lot more research. They will yes, they will actually rate shop more. They will ask more questions. And so we've got to get past this, past the mediocrity of just throwing down payments and rates and just being an order taker loan officer. And this is going to be especially hard for the older generations that have been in it. We've got a lot of boomers and Gen X, and I'm Gen X, but I consider myself kind of like, a little bit more millennial mindset, right? But it's going to be hard to make those adjustments, and we have to. So this is the age of attention. And what are you going to do to get attention? Last year, the year before, we had about this many loans, and about that many of it was refinances. Well, guess what? We have about this many loans now with only that many refinances. So we've got this many people and this many house buyers that are going to fight for this many loans. And if you're going to fight for that many loans, what are you going to do in the age of attention? It's like walking into like a Vegas bar. There's one pretty girl and there's like 5 guys fighting for her attention. It's like Deborah's in the middle and it's like the 3 of us trying to get her attention, right? So what are we going to do to get past that? And I named this Show Me the Money because I told Dave, I said, let's call it Show Me the Money, because it reminds me of the time, if you've ever watched Jerry Maguire, 2 of you have watched Jerry Maguire, right? Yeah. Remember when he said, hey, this is not about lots of clients. This is about better service, more attention. And so they fired him at lunch. And so he's walking home, and him and Sugar, they're calling clients as fast as they could, trying to get to his clients, and right? Speed, trying to get to the clients. And then when he got him on the phone, he had one chance to show Cuba Gooding, to show him the money, why he should choose him as a client. And that's really the landscape today. The landscape today is it's a market share, which means we have more people fighting for less loans. We have more people fighting for less houses. And so you have to get, there's two keys in this market. You have to get to people faster, because the problem with Jerry Maguire, he wasn't calling people fast enough. Sugar was beating them to the punch. And 2, when you get their attention for that small piece, what are you going to do to keep it? What are you going to do to show yourself that you're the best person? And I think that, a lot of times the industry doesn't do a good enough job because we get very relaxed with what's happening the last couple of years. But you guys remember that movie, right? It's like the best favorite 2 minutes of the movie.
Oh yeah, a classic. Absolutely. It does remind me, and I think about it because, certainly after we had dinner last night, we may or may not have been at, a little gambling, and sure enough, there's no doubt that the center of attention is standing here next to me. And I do feel that we have this opportunity. It was interesting. I was at a real estate agent seminar. There were 70 top agents who flew in from the country last year for this seminar. And I was talking to the guy who's the recruiter on their team. And he said he's got more people right now in the mortgage industry that are actually applying for jobs right now. So he was asking me, well, what the heck is going on? And I'm like, well, rates are up and they all need to get paid. And so therefore they're all actually looking for another opportunity. I don't want that to be you guys. That's what we've got Khai here today to help us as the grand master to get us on the right path.
So guys, we only got 21 minutes left with Khai, and I'm going to try to get him back. So he has a hard stop, but we'll have him back soon. But Khai, give us the Khai McBride Show Me the Money playbook right now in the next 20 minutes, if you could.
Yeah.
Remember, we're going to have to go we'll be going another half hour unpacking it and sharing our takeaways.
That'll be fun.
So I hold this community to a higher standard. First of all, this is a mortgage coach community. So I want to show you something. I want to show you this chart. It's a technology chart that really depicts where we are as an industry. So this is a chart that I've always looked at coming from the tech world. So we have your innovators over here. So mortgage coach Dave, big innovator. And when something is innovated, you're going to have the early adopters. Okay. Then eventually the early majority follows. The late majority, they're kind of sitting around waiting. Should I do it? Should I not do it? But they finally do it. And then the skeptics never do it. And notice there is this huge chasm between the early adopters and the early majority. There's a direct correlation with this chart with those that are successful and those that will be successful in this market. The term that I kind of despise the most is getting back to basics. It's like, you notice every time when times are tough, we want to get back to basics. I think that's completely backwards. I think you want to stick to basics when times are easy, because that's about as much as you can handle. You can handle basic framework of doing work. But when times are tough like this, you have to move toward innovation. You have to move toward getting people's attention because it's harder. And so getting back to basics is really a lazy excuse for I didn't do my job when times were easy. Now I'm going to finally do my job, when we should do our jobs when times are easy, which establishes the foundation for when times are tough, we can move toward innovation because we have more time now, not less time. We have more time to move toward innovation. So like Renee said, something like video. Well, who are the innovators in video putting video out? And then who are the early adopters in video? Why is it that years later, we're still talking about video? I think we've gotten to the point where the early majority is finally getting on, but then you've got the late majority and the skeptics going, I don't know if I want to like do video. Why? Because I don't like the way that I look. Well, like Roberto Monaco told me once, hate to break it to you, but that's how you look. Okay. You're just seeing it for yourself for the first time, how you look and what you sound like. And I'm a huge, listen, I'm guilty of that. I hate doing camera, especially like Renee said. I can sit in front of 3,000 people and do a presentation, but I go like this and I just start to freeze up, right? Deborah, did you ever have any of that when you were trying to do video or you're just like natural because it was easy for you, right? So some people easier than others. So Mortgage Coach is something that I see as an innovation tool. And I know that a lot of people here are in the Mortgage Coach community, but we have to be early adopters, not just in using Mortgage Coach, but how we use Mortgage Coach. And I've got a couple examples. Hang on a second here. I got a couple screens going. So the first concept is, before I get into that, I want everybody to pay attention to this phrase because I got this from one of my best coaches. He was a client of mine. Now he's one of my coaches, Tyler Osby. And I know he might be watching this. And Tyler hates it when I talk about his numbers, but you're talking in the last 2 years, Tyler's just done around 500 units per year. And I'm not going to be surprised if he hits that same number this year. And the best phrase that he's taught me is the phrase of how referable are you? Which, Dave, you talk about the wow experience. What's the point of the wow experience? I think people think about the wow experience as just conversion and getting the sale. But past the wow experience is moving toward being referable. Can you impress somebody so much they can't stop talking about you when your call with them is done? Because if there's one thing the top producers have in common, my top 10 clients, they all do between 300, 500 units a year. The one thing they have all in common is they're extremely referable. So you have to make that impression. Okay. You have to make that impression. And it's a sequence. So you can do it where you can impress buyers. You impress them so much that you get a lot of referrals. However many transactions you do every single month, you should get that many referrals every single month. Just let that sink in for a second. If you do 10 transactions a month, you should get 10 referrals a month. If you didn't get 10 referrals out of those 10 transactions, you weren't referable. You weren't referable. For every listing agent that you work with, let's say you did 100 purchase transactions, at least 20% of those listing agents should now want to work with you because you're referable, right?
Kai, can I ask a clarifying question?
Yes.
That might lead to a bit of a debate, but when you say 10 referrals, is that just 10 names and numbers? Is that 10 loans that you opened?
10 names and numbers that you got a referral. Whether or not they actually closed, but if you closed 10 transactions, they should have loved you enough that they would have told somebody. Whether it turned into something, but call my guy.
Quick debate, and we could talk about this more after you leave. But I think that's too low. Like, I think, first of all, if people are using Jeremy Forcier's, in process referral script, like when the person says thank you or they're excited about something, like when they're approved and you go, hey, can you help me out? Do you know anyone else thinking about a loan? I mean, Jeremy, I'll bet you he's getting more than 10 and he's matching loan for loan on that. And then of course, there's all your past clients. And if you're really, you wowed them at the point of sale, you're doing annual reviews, like I would just think it should be 2 to 3x. Like for every.
I agree. I agree that you debated it for a higher number. I love that.
Okay. Yeah. I think it should be like 2 to 3x what you just said.
But here's the sad statistic. I interview people that come to coaching, that want coaching every single day. And I always ask them that question. If you did X number of transactions last year, how many referrals do you get? And the sad number is like 20 to 30% of their total production, which means that they're constantly out there churning and getting new business instead of it automatically turning into the business because they created that wow transaction, Dave, that you coined, the phrase that you coined, and the referable phrase that Tyler coined. And that's why people keep spinning their wheels.
So here's my ask to everyone on this call. What is your referability score? So how many loans did you close last month? Divided by how many referrals you got from, and that could be a referral from a client that's an escrow. That could be a referral from a past client. It could be any referral, but what is your referability score? And please put that down below. I hope I see some people say it's like 300%. And please be honest, if it's 30%, whatever your number is, what is your referability score? Put it down below. I'm also going to do a survey on this, and I'm going to start asking everybody. Khai, that is genius, and I love it. And what do you think it is?
Well, I just read a book, and I don't recommend the book because it was a super slow and boring book, but my one big takeaway is called The Millionaire Mindset by MJ DeMarco. And he said, if you're in a business where people expect the experience to suck, you've got an opportunity to shine. And I think that's really what it comes down to, right? We're talking about your reticular activator. We're talking about when someone is buying a home or refinancing their home, they're thinking about it and they're having those water cooler conversations. And I think you kind of nailed it. What Jeremy did was that simple email that he emails out to people, because we all have that. We're all stuck. We hate asking for the referral. We don't want to ask for it. That just wasn't one of my strengths, but Jeremy made it so easy with that email that he just sends out to people saying, hey, they say, thank you. He says, awesome. Here's how you can help me. Can you do me a favor? And then people do it. And we saw it when we were sitting in his office on that site visit.
Referrals came in. And so, by the way, I'm going to put a link. I think I have a 5-minute version of that. Jeremy Forcier's in-process referral script. Anyways, Khai, I know you got to go, and I want to make sure you get everything unpacked. I just couldn't help, because I think this is a big deal. Like, I'm going to start driving the Khai McBride.
It's the framework for the sustainability of your business. Right. And so one of the things I want to create in a business is a business sustainable. And is it self-sustainable, and is it self-growing? So self-sustainable means that you're getting all the repeat clients, and self-growing means that your client base, your client base and your business partners are growing the business for you. And one of the branch managers that I work with, he has a great phrase. He says, we want to make sure that when we grab market share, we keep the market share. So you grab market share, and you grab more market share, and you grab more market share. Everybody in the business should be increasing market share by 10, 15%, 20, 30% every single year, not grab market share. And then we kind of forgot about these people, and we grab market share again. And then we forgot about those people, we grab market share again. 5 years later, you're still doing the same units. I mean, think about it this way. Look, the industry is going to go up and down. It's always going to go up and down, but are you doing the same? Are you doing the same amount of business? Right. We've had Scott Nicholson on the show before, right? Like, I love Scott. Scott, I think, is doing one of the best things to be referable. And I want to show him off for a second some of the stuff that he's doing with presentations and with Mortgage Coach, right? So Scott uses a tool, Lender Launchpad, and I love it because this is an area right here where this is an area where he's addressing this current market, especially with low inventory. He's helping his buyers win offers that are out there. Okay. You put out home buyers are out there trying to bid on a home. They're going to get 27 other offers. And I think Scott told me his latest stat is out of the 17 offers that he put out, his last 17 offers, he won 14 out of the 17 in the first try. Like, that's amazing. Let me ask you a question. If you have that track record, are you referable? Are you referable to buyers? Are you referable to agents because they know you have that track record? And Scott uses his tool, Lender Launchpad, and I love how he uses all the components to integrate, especially the Mortgage Coach down here, because he does the appraisal gap strategy, which I think is amazing. And so what this is that instead of sending a pre-approval letter, what he does is he creates a mini website. And so the listing agent, instead of opening up like a PDF, they get to go to this website, and immediately, again, this is the age of attention. He's getting attention. He's got his pre-approval letter here, and then he's got his other assets on the right. His reviews right there in your face. Okay. He's got average loan amounts. He has a cover letter here. And this is where he's got his great Mortgage Coach video. He did a total cost analysis. And Scott did a really brilliant idea with his total cost analysis. What he did, look, you got the video that he's created. He's going to explain the total cost analysis. He's using an appraisal gap strategy that says, listen, the purchase price is $970. and we've got that covered. We're approved for 970. But if the appraisal misses and it's 50,000 under, which is 920, we have enough assets, we have enough FICO, we covered it with MI, that we can cover this payment too. Because as a seller, they're always afraid that, you know, they are putting it out there for list price, people are going to overbid, but in the back of their mind, the sellers are worried a little bit that they can cover that gap. And Scott is using Mortgage Coach to show that. He's using innovation, he's using attention, and he's using his tool to illustrate that to an agent, to give them confidence that I'm the right, that we are the right lender for you. Because what buyers have to understand and what agents need to understand, and we can talk about how to offset rate shoppers, is that when it comes to getting an offer accepted, 100% of the decision is who is the lender. It's not the agent. It's who is the lender. And what are you going to do to stand out? Did you just give them a normal pre-approval letter? Maybe you gave them a good rate and a payment. That's not going to impress the listing agents. Okay. And so Scott used that tool. So if I'm working with a buyer and they say, well, the credit union is offering me 0.25% less, my answer to them is that's great. I love credit unions. Credit unions is my go-to if I want to get a credit card or if I want to go buy a car. But when it comes to buying a home in this market, where you're going to be competing against 27 other offers, 100% of the decision of the listing agent and the seller is going to be on you, on the lender that you pick, and which lender is going to go above and beyond to get you to win that home. And let me show you how I do pre-approval letters. What I do is I send them a presentation that looks like this. And I'm 14 out of 17 in terms of winning in my last transactions. Okay. So not only does that help the wow experience in getting that transaction, but it makes you more referable, because now that person is out there talking to their, they're at a party, they're talking to their cousins, they're talking to their brothers, they're talking to their uncles, and everybody's talking about how difficult it is to get a transaction. And then they can say, well, the lender that I picked does this. The lender that I picked won 14 out of 17 transactions. And it becomes referable. That's called a before referral, where a client will refer somebody to you even before the transaction closed, because they were so impressed by the presentation itself that they want to tell everybody about it. That is the highest level of referral. When you get referred, everybody always thinks that I get the most referrals when the transaction's done because you had to prove yourself. No, if you get a referral before you even started the transaction, that means you impress them so much they want to refer you even before you even started. And Scott's doing that right away.
You have a script for that, Khai, or how do you ask someone to give you that referral?
So I have a couple different variations of referrals, but the best referral that I use in transaction is I ask them a really simple question: is on a scale of 1 to 5 stars, how am I doing right now? How am I doing to meet your expectations? And what is my level of service on a scale of 1 to 5 stars? I think everybody can relate to that, because we're like in a social survey kind of Yelp, rating age. And if they say 4 or 5, that's when you ask the referral. If they say 1, 2, or 3, you apologize profusely and say, I'm so sorry, where did I miss the mark? And here's why that's the best referral script. Most of the time, we don't ask for referrals because we don't feel worthy of asking for referrals. Todd, you said to yourself, sometimes you don't like asking for referrals, but deep inside, subconsciously inside, is because you don't feel worthy of the referral. But if you knew inside that they thought that you were the absolute best person and you were a 5-star lender, is it easier for you to ask for referrals? And so what that does is that gives you that instant validation. Have I met your needs? Have I met your needs in terms of preparing you to win an offer? We won that offer and we closed the transaction. How did we do on a scale of 1 to 5 stars? And the ones that are really ecstatic might say, man, I would give you a 10 out of 5 stars. Right there, that is the best time to ask for a referral. In addition to what Jeremy said, anytime somebody says, thank you, you've done a great job. Because what that is that's a subconscious validation that lets you ask for that.
And I love that. That's genius. Think about that, right? You're asking for a mid-process. How am I doing? Am I kicking ass enough for you to get a 5-star review at the end? You're asking in the middle, so you've got that time to course correct. So I think that's a great reminder for this community. I haven't heard that in a long time. So I love that, Khai.
And then now you take something like that, and you will now approach the buyer's agent. And you say, look, in this market, the number one thing I can do to help you is I can give you an edge of getting the offer accepted. Because the reality is that a buyer's agent, you have one job. I would like to think that you don't consider yourself a professional Uber driver and all you do is you just drive people around to see homes all day, right? Like your your craft should be to go in and negotiate a good offer. And the agent and the lender play equal parts in there, because you got to get really creative too, with sometimes waiving appraisal contingencies, loan contingencies, expecting contingencies. I have coaches and clients that will give $5,000 closing guarantees to sellers, but you have to do everything to grab attention. And you explain that to a buyer's agent, and now the buyer's agent is looking at you at a different light as well. They're saying, okay, wait a second, this person is like above and beyond your normal lender, okay? Because he's stepping away from just giving this person rates. And the whole 3 business card, well, I'm gonna, I want them to get a good price and everything. Just listen, okay? I don't care how many other business cards you have. I don't care whether you want them to get good price. I mean, right now I'm 14 out of 17. That's something that Scott Nichols can say, and a lot of other really great loan officers can say, because they can be aggressive with offers. That's what it's going to take in this market, and it's getting worse. That's the thing. What are we, only like 3% or 4% new home constructions this year, when we've averaged like 15-20% over the last 10 years? It's crazy.
Well, there's only 2 posts we see from our realtors, right? We see the post about how much it costs them to fill the tank of their SUV when they're driving clients around. And then we see their post about complaining about how low inventory is and how they're losing out on offers. And so if someone like Scott can come in there and nail 14 out of 17, I mean, that is a competitive advantage. That's the secret sauce that he has that maybe the rest of you don't have.
Right. So now you've impressed the buyer, you've impressed the listing agent. I mean, you've impressed the buyer's agent. So you're going to go out there and you're going to be aggressive. And here's the thing. Here's why I love video. Because I talk to a lot of loan officers. Well, I am aggressive. I call the listing agent. Here's the problem with calling a listing agent. Well, I don't want to say here's a problem. Here's a limitation in calling a listing agent, is that you're limiting yourself to like one dimension. It's just a phone call. It's a voice, etc. Send them this link and send them a video. It's much more dynamic in the presentation. Send that to them first and then call them and say, do you have any questions about this? And so the way Scott does it, he just sends out a link and then there's a video in. But the other reason why it's sticky is because, remember, it's still not the listing agent that's going to make the decision. It's the seller that makes the decision. So it's like the telephone game. You can do a really good job convincing the listing agent, but then they have to then represent you and then say that to the seller. Well, with a video, with something that is hard, they can then pass that on, and the seller is going to look at that and say, this is the buyer that we want, right? This is the buyer. And that's why video is so important, because again, what Scott and a lot of great people do it. I know one of my coaches, Robert Mahaffey, does it. He'll send out this presentation. He'll add a little bit of video and let the video explain in 2 minutes everything about this buyer, why they're a qualified buyer. And so by the time you make a phone call, and I know some top realtors that have blatantly told me this. I love getting videos because I get calls every single day from lenders calling me to try to convince them to take this offer. I put out an offer. I got 27 people calling me. So I don't answer the phone, but I can watch a video for 30 seconds, right? And so again, you've stepped up the attention. This is the age of attention. You've grabbed attention in a different way. And so now you've impressed the listing agent. So we've impressed the buyer, we've impressed the buyer's agent, we've impressed the listing agent. Everybody else asked me, well, how do you grab a listing agent in a transaction? Well, the way you don't do it is you put a normal black and white pre-approval, and then you kind of do the transaction, and then you do this week. Well, I'm hoping we can work together at the end. Maybe think about me the next time you do them. That's not gonna fly. But if you start off in the right foot, remember this listing agent hopefully is one that you impressed really hard. So you're starting off on the right foot. They're excited to work with you. Now you should be able to deliver high quality service because of yourself, your team, and the lending institution that you work with. And I recommend every single week. I do it on a Tuesday because that's like the popular day to do it. I learned it from Greg Frost back in the day. You call on Tuesdays. I would send a Monday night email with like a status, and on Tuesday I would call and I said, did you get the email, the status of your loan? Everything's on time. Let me ask you a question. On a scale of 1 to 5 stars, how am I doing? You should ask for a referral at least 4 times in a transaction, once every single week, and call the buyer and listing agent too and ask them the same question. On a scale of 1 to 5 stars, how am I doing? And then ask for a referral. So obviously, if it's a borrower, you're going to ask for the referral and say, thank you so much. I work hard to deliver a high-end service so that I can help you win a property, make it pleasant. Because what did you say, Todd? This should be home buying is generally like in the top 3 of most stressful things besides having a kid, getting married and divorced, and like buying a home, something like that, right? I'm here to flip that around and make this a pleasant experience. So if I get a 5 stars there in the pleasant experience, then you're going to ask for a referral and say, I work hard to do that. So you can continue to use me for future transactions and your friends and family. By the way, since I have you on the phone, do you have a close, and it's Dave's referral script. Do you have a coworker or best friend that is looking to buy a home that you can refer me to? And then you have to step it, because if they say yes or no, then say, okay, well, how about this and how about that, right? You got to be very specific, right, Dave, when you ask for a referral. Don't say, do you know anybody? Because I know 1,000 people. Say, do you have a best friend or coworker? Start from there. Then say, do you have family? Do you have this and that? And just go through all the different categories, right, Dave? We learned that a long ago.
Yeah, we did. So here's what I want to do. I want to run an idea by you, and then jump when you got to jump, but just give me your feedback on this. I'm thinking that, Deborah, let me know if you think it's a good idea, where we create this library of the most referable presentations that are most relevant in the market today. So let's face it, the most referable pre-approval strategy. And I think what Khai described fits under that category. To me, there's another big idea, and I want to get your opinion on it, where a loan officer could help a realtor get a listing. So have a conversation with an agent that makes the agent go, wow, I see how you could help me get a listing. And also do it in a way that is a wow for a financial planner. So here's the idea, guys, that in the market you're at, there is a low end, middle end, high end, and ultra high end in every market. It varies what it's going to be in, one state and one city versus another. It's different, but I want you guys to think about the high end, not the ultra high end, but the, middle high to high end. And then whatever that value is, think of that as a move up buyer. Those are people that want to go from high end to ultra high end, or middle high end to high end. Find some people in that category, and then arm your realtors with a move up analysis that says, hey, this is what you're living in now. And let's say they have 40% equity. And there's a lot of people, equity grew, guys, on average in America grew by 180,000. So what if you put together a TCA? Column A is the home they're in. Column B is the home they buy, the move up home. So 20% more home. They only put 20% down. So, and here's the other thing, guys, do a 10-year interest only. You'll see that those rates are going to drop the payment. And then they take that other 20% and they invest it with a financial planner. And that could be anywhere from hundreds of thousands of dollars to $1 million that now they're investing at like 6%. And here's the deal, guys. I did one recently and then column 3 is, let's say they buy 20% more home and they put the whole down payment. So if they have to close without doing it, they close and then they recast their payment. And here's what's going to happen, guys. Column A is going to be about the same payment, only they're going to be probably increasing their net worth by 40% between leverage of real estate and a 6% rate of return. And column 2 is going to be a very similar monthly payment, maybe even a lower monthly payment. So they're going to get 20% more lifestyle for about the same payment. And dude, it's game changing. What are your thoughts on, and then of course, where's that investment money goes to? It goes to a financial planner. What are your thoughts about loan officers creating an entire program around that? They got a TCA, they got a lender launchpad, they got a script, they do a 15-minute realtor meeting and arm realtors with move-up analysis to get sitting move-up buyers off the fence and listen. What are your thoughts on that?
Yeah, in addition to that, I mean, I have clients that are creating PowerPoint presentations that walk people through markets, finance. If you're not doing a Zoom presentation with your borrowers that you can use visuals to explain and grab their attention and show them how people work, even simple things like how do impounds work, right? How do escrows work? You ever try to explain how that works? Or somebody gets they say prepaid interest on their final closing documents. They're wondering if you're ripping them off. Like, use visuals to explain that to people. That was a buyer presentation. Let's see here. This is one of my.
Can we get a copy of that? Would you be willing to share that?
Maybe some of these belong to my clients. I'll ask them if I can, right? I wanted to kind of show and tell to some of my best clients that show me some things, but here's like a presentation that one of my coaches uses, and this is a 350 unit producer. He sits down and talks with real estate agents, why he's the best partner for them, right? These are all visuals, and it would be great, you're correct, to have a library of these presentations, because this is what makes you referable. And by the way, that listing, Scott does that too with like, he did like a CMA analysis, because what happens is we just impress this listing agent. Yeah, exactly. And so what will happen is at the end, when he's asking that listing agent, can we work together? He'll say, well, can we also spend some time because I'd like to help you get more listings. That's how you get a listing agent on your side. Now, every once in a while, obviously you're going to deal with the listing agent that says, why only do listings? What that's fine, but you're still referable, because what happens, that listing agent is going to impress you and they're going to refer you to a buyer's agent. Or a lot of times you're dealing with a team where the top agent is like the listing agent, and guess what? He or she has buyer's agents below them. And so you show them that listing presentation, and then you do another presentation. It's the old Tim Brahim page 5 strategy on a scale of 1 to 5 stars. Do you like your financial planner? Oh, 5 stars. I'm looking for a financial planner to refer to my clients. Do you mind if I call them and let them know that we have that you are a mutual client, so I can have a conversation, and then show them a presentation. This is my favorite financial planner script. You manage assets, I manage debt. And the biggest way for somebody to build assets is to have their debt managed properly. So as a mortgage person, I think that's a very synergistic partnership with a financial planner. And let me show you some of the things that I do, some of the TCAs and cost analysis that I do to help people maximize their wealth over time.
Hey, let's do this, Khai, because I want to be respectful of your time. Let's schedule another call, like whenever we get it on, and let's just talk about, and make it, even the title is, becoming the most, increasing your referability score. Right. And let's come with one of your clients. So it is a mortgage coach. So we've got a TCA, we've got a lender launchpad, and let's just train on 2 strategies, a move up strategy and a ultimate pre-approval. Those are 2 things that in this market, maybe we'll even have Scott. So before we go, any questions you want to ask or anything you want to comment, and then we'll have 20 minutes.
The funny part was, Khai, you said, hey, I don't want to talk about getting back to the basics, but I feel like when you go back to Tim's, the page 5, I mean, to me, that's the basics. And I feel like most loan officers overlook that. They're in such a hurry to get to the next conversation that they're not taking the time. I mean, we started off here saying we were at Amplify yesterday, frame, message, tie down, right? That's what you're saying when you're asking someone, hey, how am I doing on a scale of 1 to 5? You kind of gave that little backstory. Hey, people are frustrated, getting a home loan is one of the 3 worst things, like getting married, getting divorced, all those things, right? Frame, message, hey, I'm here to do a great job. Tie down, how am I doing on a scale of 1 to 5? And can you refer me to somebody else? And so, although I agree with you, I don't love getting back to the basics, but ultimately in the end, that's what this market.
Well, I was just making a statement. Because I hold this group to a higher standard. I'm saying we never should have let go of the basics. That should be done when times are good and you're getting all these refinance loans. You should still be asking for referrals. You should still be impressing your purchase transaction agents and everything. That, we should never get away. What we need to spend extra time doing in these times is working on these presentations. But what's happening is that when people lost track of the basics, they're spending all the time doing the basics and they don't have time for these presentations. And we got to have time for both, right? We got to hold everybody to higher. Here's what I've learned in coaching. We don't coach to the lowest denominator. We coach to the highest denominator and let the people rise up to the top.
Love it. So, hey, Khai, let's also, when we do that next call, let's package it as a sales meeting. So we literally, we create like a 30-minute sales meeting that every leader on this call could go and do with their team. We teach that content, but we package it like, hey, branch managers, this is how you would go and do a training on all of this. So I'll send you an email to get this scheduled. Deb, anything you want to say before Khai?
Yeah, I was just going to say, what's interesting is we know this market right now is really tough for first-time home buyers. They don't have the down payment to make. So that means a lot of the people buying are selling a home, which means they've used a lender before in the past. So this is where and I won't say back to the basics, I'll say fundamentals.
Thank you. All right, good.
I love fundamentals better, yes.
That means that anyone listening to this, your current database right now are the ones that are buying. So if you're not nurturing and staying in touch with your database beyond the transaction, you're losing market share by
Mhm.
not being in their life
You're
if
giving
they
up.
are to be your client for life. So for those listening, don't just focus on new leads. Go back to your database. Right now is a perfect time to just call and say, hey, what do you need right now? Because people are hurting financially. You know,
I think you make a great point, Deborah, because the two most disadvantaged buyers right now are first-time home buyers with a small down payment and VA buyers, especially VA buyers, because there's a bias against how VA loans are difficult. And so I think that as a lender, if we overshoot the mark in terms of our presentation skills, the TCA using a total cost analysis, using tools that they'll look at what they think is a disadvantaged buyer, and it looks better than a 20% buyer, because the 20% buyer, that lender didn't impress them with their skill set, their acumen of the market, then that's how you'll help first-time home buyers and VA buyers as well too.
You know, and I'm going to edit something I said earlier. I said you should create the persona for that kind of high middle end. After hearing what Deborah said, actually, guys, I'm thinking you want to go and you want to find the first-time home buyer move up. That way you're getting a listing for a first-time home buyer. So that's not someone else that has to sell a home to buy a home. So you got a non-contingent buyer and you're creating a listing and a move up to the next level. So I think that's actually priority one avatar, kind of the low end, first-time move up buyer.
along with sales boomerangs.
Yeah, and I'll tie this down right before.
Waiting, I've been like,
No
all right.
bar lip. Yeah, I love that. No bar lip. And I'll tie this down right before I jump. One of the things that we learned from Amplify is that you don't have to be this polished person, or like I said, you don't have to be this buyer with like 60% equity. What we need to do is we need to tell our story better, because if we tell our story better to the agents and to the buyers, we're going to win. And so telling our story is about the visuals, but also if I'm going to call that listing agent, I'm going to tell the story of how veterans and military have affected my life and why they should give that chance for them to buy a home. And you use the amplify effects to win over that listing agent. And then you've got the full circle of visual presentation and verbal presentation.
Love it, Khai. So dude, thank you for going a little long with us. I look forward to getting you back. You are the man, bro. Everybody, we're going to keep this going, so don't go anywhere. Like, let's see how many people we lose because Khai leaves. But we got
you have Deborah. You're fine. You're fine.
Yeah, we're good. I know.
We got over here doing the social media.
We got the bird.
Yeah.
We can easy,
Okay.
brother.
It was a great time. I'll see you guys later.
All right. So who is listening to this right now that wants more loans? You know, the whole call was around show me the money. And I think what Khai just shared around upping your referability skill, your referability process, is probably the fastest way everybody can spike their business right now. I want to make sure everyone goes back and listens to that Jeremy Forcier, how to ask a current client for a referral. Again, that's his number one lead source, his most convertible lead source. It's a gold mine, and we do need to go back to the basics on that. So
We're going to fundamentals though. We don't go back to the basics.
Okay.
I taught us that.
Okay,
Thanks,
fundamentals.
Deborah taught us that.
Okay, so let's do this. We got another 15 minutes. Community, I'm going to go check in Facebook. If you've got a question and you're asking it live, put it down below. If you have a question, you need help. If you need help, put it in comments in our YouTube channel. That is where we have the most distribution for calls like this. So let us know what questions you have. We want to help you make more money, close more loans, and create social impact by changing the way people get into debt. So let's do rapid fire. A big idea under that theme, show me the money. We just came out of Amplify. What is a show me the money idea for everyone? And we'll go around until we run out of ideas.
All right, Mr. One by
Well,
Name.
you're first, he pointed to you.
Well, I'm just going to say, for getting back to the fundamentals, it may not be a big idea on this first one, but I'll just say, if you're not tracking what those activities should be, I'm a firm believer you've got to use your planner, track your activities so you know which ones are working and you know where the gaps are, and use this not just for yourself if you're a single LO, but if you're leading also your real estate partner teams. We do have the Modern Mortgage Summit coming up May 25th, which would be a perfect time to order, say like your top 10 real estate agents. Go ahead and order your planner. There's a real estate version for them. Have them come to your mastermind, give them this gift so that they can track what their big ideas or big takeaways are going to be from the mastermind, and then hold each other accountable by having a reoccurring meeting with them. It's a business meeting. Maybe it's the 25th of every month or the third Wednesday of every month, and also have them get back to the basics, fundamentals, where you're tracking how many quality conversations am I having? Because you can't control the outcome. I loved when Ryan Grant said, don't tie emotion to the outcome, just focus on the activity. And over time, when you are doing the right activities, the results will come. You just have to be patient and don't just give up, after the first week. So it may not be a big idea, but go to winbynoon.com, get your planner for yourself first, order a bunch, get the mortgage coach edition if you want, for your real estate partners, and be intentional with what's coming ahead and use it as leverage to get in front of more agents, but also to grow the agent's business.
I love that. So let me give a some quick insight to the Modern Mortgage Summit this year. So I think most of you know, we're doing the Modern Mortgage Summit in the morning. So you buy a pass, and then in the afternoon, we're going to switch gears and it's going to be the Modern Real Estate Summit. So we're doing them the same day. So that way you're going to be plugged in, you're going to be learning in the morning, then you're going to have your realtors show up and you're going to be plugging them in the afternoon. And we also have the influencer pass and the branch passes as well. So you can buy more passes to get your agents involved. I would say, you said it before, you said you've got to stay in touch with your database. So if I'm talking about fundamentals, right, turn your database into a data bank, right? You've got time now. I hate to say it, right? It's not rain and shower and refinances on us. And this is the time to resharpen your annual mortgage review game. It's to resharpen the connection with your clients. Just say, how you doing, right? Hey, congratulations. I got you that loan at 2.75 last year. Now rates are at 4 point, whatever you're quoting these days. Congratulate them, give them the high five. And then you can give the script that Khai gave, right? Hey, how did I do on a scale of 1 to 5? And any suggestions you'd give to me, right? Again, they're going to be thinking, wow, Deborah's amazing. Here I am a year later, she's following back up with me. And it's just a great opportunity for you to go back in, show them that you still have their back, and that going forward, you're there for their referrals. I think that's one of the opportunities we have in this market, where we have time that we didn't have last year to be a better partner to our clients.
So if I was your sales manager, and I'm going to pretend like I am right now.
You are.
I loved what Deborah said. So, she could have just said another idea, like, oh, ask your referral. She could have said another idea, but she went back to the fundamental of success. You have to track it. You have to measure it. I mean, the most foundational business rules are you can't improve what you don't manage, and you can't manage what you don't measure. So guys, that is a foundation to success. So you heard a new score, this referability score. I promise you, if you just did the calculation this month, where am I right now? I'm at 30%. And I don't care if you're at 200%. I think you could be 300%. I think that is the standard that the mortgage coach community should strive for, is that you have a 300% referability score. That means if you closed 10 loans last month, you got 30 referrals last month. So what is it? Share it down below. And I guarantee this community will come up with all types of tactics to do it, but it got to start with measurement. So if I was your sales manager, I'd say, guys, I do want everybody to upgrade how they're asking referrals with current customers. But most importantly, I want your measurements. I want to know what your referability score is today. And I want to know what your goal is over the next 30 days, so that everybody knows the brutal reality of where you're at, and what your goal is over the next 30 days to get it. That is my sales management from today. What are your thoughts?
Well, I mean, Khai nailed it. He said it's a fundamental, right? He said a lot of people in the mortgage space do Tuesday update calls, and it's your opportunity to wow your client, to wow the buyer's agent, wow the listing agent with that. Hey, I mean, just something super basic of, hey, it's Todd, it's your Tuesday update call. And then you've got that opportunity to ask how you're doing. You've got the opportunity to ask for the referral. And everyone is too busy. I shouldn't say everyone. A lot of people are too busy. We heard the real Brad Lee yesterday talking about, you use the word standard, right? We saw Navy SEAL Andrew Paul, who's a friend of our community, up on stage, and we talked about that. You and I did a call maybe 2 years ago on setting a standard. And Brad Lee said, well, don't tell me you're going to do 10 million in sales. Show me you're going to do it by actually committing to that. Mm-hmm. And I think that's where the numbers piece comes in, because I talk about my brother-in-law a lot. I've been training in the business, and he wants to double his business this year. So he and I looked at his numbers from the Q4 of last year, and we looked at how many people he called. We looked at how many people he talked to, how many quality conversations he had. And we figured out, based on that if he was going to actually hit his goal this year of doubling his thing, he had to increase his calls and conversations to 30 every day. It sounds like a lot, right? It is. And So I can call him out on it. So when we have a morning team call, right? And he's like, hey, I had 12 lead calls, 8 partner calls and 22 conversations. Well, that's not what he committed to. He committed to 30 to double his business. And that should be the standard. And so the question really is do you know what your number is? Do you know what you have to do today? How many people do you have to call and talk to in order for you to hit your goal at the end of the year? And I think typically the answer is no. And that's why I love your fundamental of, hey, you've got to actually record the activities and track the results to figure out what it is you've got to do in order to grow.
The thing I would add to that is going back to your brand's character and brand leadership. A lot of you, and I do a lot of the discovery calls, and you guys will tell me how, you lead with education and you do go beyond the transaction. And that's where I would really challenge you all to start learning and maybe reading either new books or going back to some of the books about financial literacy, where right now, I really believe I saw a stat that said the average American family's household expenses just increased on average about $300 a month because of inflation, gas, utilities, et cetera. So if your brand's character, if you truly care about your clients and your database and you go beyond the transaction, then you need to pick up the phone and call them. And it's such an easy conversation right now to just say, how are you doing? I'm the captain of your wealth team. I'm just checking in. If they're on fixed income and their expenses have gone up, then chances are they could be at risk with racking up credit card debt. And so how are you being proactive and playing life on offense to help be that leadership and be their guide, being world-class for them? So reach out, be the solutionist, figure out what their problems are.
Solutionist. Everybody get that word? Write that down.
Yeah. What did we learn last night?
Solutionist. Possibilityist.
I missed that one.
We learned a couple new words.
Liquid assets.
Yeah, liquid assets. Yeah. We had all kinds of fun last night with Jeremy Forcier.
Yeah.
In fact, by the way, guys, I'm going to be doing an interview soon with Jeremy where, now that I'm Mr. Mortgage Coach and Mr. Sales Boomerang, there's about 12 alerts that the best loan officers in the country get. And guys, these alerts, all Rocket's getting them, all big banks are getting them. So all the top alerts that you could possibly imagine, I'm going to just do a call dedicated to Jeremy Forcier. You get a credit inquiry alert. What do you do? Jeremy Forcier, you get a just listing alert. What do you say? What do you do? So we're going to do just all like alert scripts, and more alert scripts with Jeremy Forcier. So that will be coming up soon. If there is an alert that you want to make sure we go deep on that are most important, put that in comments down below. So before we go, I know you have something to say, but I want you to be thinking about it's TCA Tuesday.
Yeah.
What is the TCA Tuesday homework assignment? But go ahead.
Let me just throw in real quick too, because I've already got a waiting list for the Jeremy Forcier site visit, right? Dave and I did one 2 years ago with Jeremy before COVID hit, where we flew in, we had dinner with Jeremy and his wife at one of his favorite local restaurants near his office. Then we went in and we spent the day in a life of Jeremy Forcier with his team meeting. We walked through how his team runs a meeting. We literally sat there as Jeremy did his calls, did his business, and walked away with his emails, his scripts, everything he did. So just email me, todd@winbynoon.com if you want to get on that list. As we said, we had dinner with Jeremy last night and he's working on it. We'll have a date by the end of this week that we'll be sending out for people who want to commit to that. It is a premium event. So it's not for the faint at heart. It's going to be a small group of us and it's just going to be a lot of fun. And then we finished up with a dinner at his country club. That was kind of nice.
What do they do? They email you?
Yeah, it's email todd@winbynoon.com. I'll put you on the list and certainly we'll.
How big is the list so far?
It's double digits. We're almost 20 people on the list. So that's going to be double what we're going to have at the event. So we probably won't be over 10.
I don't think we'll go to 12. I think we'll do 10. So let's get that list up to 50 and then we'll send out the dates, the invite and the details, and we'll put something really magical together.
Yeah.
So Deborah, we got 5 minutes. What is the one to many today?
Okay, so if you're in my group, then this Tuesday, your TCA Tuesday is the cost of waiting. And what I would do for this one is equip your agent partners. I would show them, I wouldn't do it like when you wait a year. I think it was actually Jeremy who showed us this TCA. I would show the cost of waiting of just 2 months ago. That way you can help your agents when they're the front line. How are they putting a sense of urgency for those buyers who are out looking right now that are kind of dragging their feet? It's like, what is dragging your feet and not being super aggressive with your offers right now? What is that really costing you? So I would show them again, I would go 2 months ago to now and then where we're headed, but I would make it as a social post that you could go live with or post for yourself, but also email it out to your agent partners and say, hey, if you're working with buyers right now who aren't aggressively making offers, then show them this cost of waiting to help educate them so they feel empowered to make better decisions, because maybe they just don't know what the risks are.
All right, guys, and if you need some training on that, I want to remind everybody that we've got a really cool, Todd, could you hang on?
Sure.
If you go to our training page, so go to Mortgage Coach, click on resources. There's on-demand training here. I'm going to go to daily training. So right now you guys are on the Tuesday event. And remember, everybody, you got to sign up for that. So if you want to be live in Zillow, or excuse me, in Zoom, this is where you do it. But if you just need some help, like strategy training, every single Wednesday at 11 o'clock, you got to sign up for it. So if you want to go to this next one tomorrow, you need to go here. You need to click on March 16th and sign up for it. Every single Thursday, we do Q&A training. So if you want to be at the next one, which is 17th, you need to sign up for it. And that is group training. So that is where we'll teach you, we'll train you. If you're a beginner at the cost of waiting, we'll move you one level up. So make sure you come to that Mortgage Coach training, guys. We are dedicated, we are dedicated to your success, but you got to show up. You got to come to the events. If you got value from this, give it a like down below. Help us with the algorithms so we make more impact, more loan officers see this. For all you managers, share this with your team. Todd, any closing thoughts, or how do you want to wrap up today's call?
Well, I mean, my closing thoughts are two things. Number one is this is so much fun. It's always awkward to stand here when we do these calls together, but it's great to hang out with the two of you and to be here and to be able to add value to the community. So number one is, man, this is what fills my bucket, right? So I really love this, but it always comes down to, what do we do? You've invested time either watching this live or watching this in the YouTube channel, and it's about taking action. Right? In the end, you just had Khai walk you through how to be more referable. And I would just be thinking about, how do I take action on what Khai said? How do I do what Deborah just said and do the one-to-many strategy today on the cost of waiting? These are things that you sat here, you listened, and now you need to do it. And when's the best time to do it? Right now, right before you check your email, before you respond to your text, before you do whatever it is you're thinking about doing, take action now. And that's how you're going to grow your business, because this is going to be a hard year, but we're trying to make it easier for you.
It's a year where you get market share. Closing thoughts.
Don't forget, Thursday is St. Patrick's Day.
Oh, yeah.
So don't risk your business on luck. Track your numbers so that you know the skills, and that builds your confidence. Otherwise, subconsciously, you could think, oh, I just got lucky last year. Well, don't risk it on luck. And then follow the Win by Noon social media channels, because you guys are going to guess which beer you would drink that's green, since you're such a beer guy. Don't sell them now, but they have to guess.
All right, that's good. I like that. I like that. I didn't know that was what we were doing on social media, but when you have the Bird team on you, so plugandplaysm.com is who does all of our social media for both Modern Mortgage Real Estate Summit and for Win by Noon. So certainly it's always a gift to have Deborah here sharing her gift.
All right, guys, thank you for your time. Thank you for your attention, and we will be back every day. I will be here on Tuesdays and Fridays, and we'll see you soon. This call is a wrap. Take care, y'all.